Namaste and a very warm welcome to our channel, Rusty Traders. A lot of people come and ask me as to which one's better, being an intraday trader or an investor. This video is a very small effort to answer that question. So let's start. Now let's start with the things that are common to both. The first one is both of them want to time the entry precisely. Both of them, be it intraday trader or an investor, they need a lot of emotional balance. Both of them have to master the skill of technical analysis up to a certain extent. Yeah, the intraday trader needs to have a substantially wider and a larger amount of knowledge compared to an investor, but then it is not a return rule, but yeah, the intraday trader needs a know-how of technical analysis far much more than what the investor does. Both of them have to define a stop loss. Maybe for an intraday trader, it could be maybe 2%. For the investor, it could be 20, 30, 40% based on their risk profile. Either way, both of them have to have a stop loss. As with the stop loss, they also need to define a target. Probably the intraday trader would define or determine his target based on the risk reward, the trade setup. The investor would see it on a quarter to quarter, probably on a year to year basis, something on a fundamental nature. So unless until something on a fundamental nature doesn't change, probably he might not think of getting out. Or if we trust the management, he could be in the stock for maybe a decade, 2 years, 5 years, we don't know. But then either of them have to have an exit strategy. Now these are the things that are common to both. Now let's go to the section wherein there is a substantial amount of difference or things, or where the things change for either of them. Now, trader versus investor, a short or an intraday trader versus an investor. Now, for an intraday trader, I am assuming that the trader is closing his positions and he's going home. So for a trader, if there are some overnight great news, he loses an opportunity of making money on the overnight market moves. Investor can make a lot of money on the market moves. Here, obviously, the caveat is that we are talking about a bullish scenario. On the other side, obviously, the trader might not lose a lot of money if things go south. Probably, yes, the investor might have to book M2M losses on his portfolio, but then that is how it works. Second, an intraday trader is not able to take advantage of dividends and bonuses, whereas an investor can make exponential amount of money just on the back of bonuses and dividends. We have seen people accumulating their principal just on the back of bonuses and dividends given by the companies. So, obviously there are pros and cons. That is what we're discussing here. For a trader, the lack of risk management, position size can lead to a whole account getting wiped off in a single trade. I've seen a lot of people burning a hole in their pocket in a single trade where they trade in instruments like options, futures, primarily derivatives. On the other side, the investor is also not safe. A lot of times, or there are a lot of instances wherein companies have lost more than 50% of their value in a single day when issues pertaining to corporate governance were raised, particularly in India. So it's not that the investors are safe. No, it's not like that. Both of them have their set of instances or scenarios wherein they can lose money. For a trader, every day is a new start, and strategies can be tweaked instantaneously. Probably a trader thinks that it's a bullish scenario, and then suddenly on the charts there's huge amount of selling. Then instantly he can close his bullish bet, book losses, and open the sell side. For an investor, it's not that. He's in the market for a very long period of time. He's primarily focused on the market cycles and not worried about something that is happening on a 5-minute or a 15-minute or an hourly chart. That is not how investor works. For a trader, stop losses are relatively small, and the idea is to make money by taking multiple trades. So I take a trade, take maybe 1%. That's it. I'm done for the day. Another day, same thing, 2%. That is how you know Indian intraday trader thinks of making money. Every day he has new trading setup, new trading idea, and he takes it or loses and he shuts his shop. For an investor, the idea is to buy it and sit tight and have faith on the growth prospects of the company based on the person who is running the show, primarily the promoter. So he's not there for 1 to 3%. He's there to make a lot of money. I mean, he's there to at least make 50, 60, even double his money. So this is a very a very conservative figure. But then yeah, investors are there for the long run. For a trader, every day, as we said, is a new start, and he has to identify setups. He has to be aware of all the news, how things are panning out. For an investor, he has to have his eyes on the portfolio. For a trader, the primary focus is on technicals. For an investor, the major focus is on the fundamentals. He has to see quarter on quarter. He has to analyze the balance sheets, the P&Ls, and just see what is something as simple as what amount of debt is the company taking up, from where uh, is the primary chunk of profit coming in. Is it the other income or is it profit from the business? This is something that every investor has to keep an eye on. For a trader, he's just watching the candles. He's just watching his charts and then taking his decisions. And an intraday trader has to be able to give time on a daily basis. If the markets are running for 6 hours, he should be there for 6 hours. Not the same setup or scenario or requirement for an investor, because he is not worried about what is happening. So if he is doing some other job and he is investing in the markets, then obviously he need not, obviously anyway, is not going to be able to give time. So this particular criteria is not applicable to an investor, but then yes, he has to keep an eye on his portfolio. For a trader, the whole idea is to develop ideal strategies, whereas for investor, the idea is to develop an ideal portfolio. One more important thing that we all have to understand here is that here we go. So after all these discussions, which one's better, being a trader or investor? So we are back to square one, and we are asking this question. So if you ask me, if you are not able to give 6 hours, complete hours of yours for the stock markets, then you should not become an intraday trader. Do not fall for the tips and all those things. Like your profession needs learning, full effort in trying to learn certain aspects, certain critical aspects. So does stock market, so does trading, so does investing. So if you're not able to give time, do not get into short term or intraday trading. Invest in a very small amount. Also, if you are a working professional, then again it is wise to invest via different routes. You can directly invest, you can go through the mutual fund route. Another important thing is that you have to understand what kind of mentality you have. Are you somebody who gets scared by a dip of 2%, 3%? Then probably it's a lot. I mean, investing is not your cup of tea, because when you say investing, there could be wild swings, because 2-3% can easily get taken out in a single day. So if that is there, then you should probably stay away, or you should reduce your position size and just try and understand that, okay, fine, if I'm able to take a hit of only 1000, then probably I might not take a position size of, let's say, 400, 500, because it can get easily get taken out. So you have to understand as to where do you fall. There are a lot of people who are just not worried about a fall of 20-30% or 40%, because somewhere they trust the promoters. Now, is it worthwhile or not? Only time will tell. But then it's all, what kind of money are you putting to work? Are you using the money that you're not going to need for another 3, 5, 10, 12 years? Then probably yes. But if you're using a money then which you are going to need for, after 1 month, 2 months, 3 months, then probably you should think again on the investing front. So if you ask me, the bottom line is, if you're able to give time, if you are very emotionally stable, if you have a thorough uh, control or understanding of technicals, or a substantial understanding of technicals, how trade setup works, risk management, a lot of learning regarding how things work, something as simple as price action, only then you should give time and become an intraday trader. If not, if you are into some other profession, then please avoid getting into intraday trading, because it becomes quite challenging, in the sense that there are wild fluctuations, and then if there is no control over position size and if emotions take over, there is no risk management, then things could go south very easily, and then it cascades onto a lot of things, into your social life, into your professional life. Things can go very bad very quickly. So if you are a working professional, then I will obviously suggest that you go through the investment route. But again, you have to define your stop losses and your targets. A lot of learning also has to happen in this scenario as well. And as we all have said, do not put all your eggs in one basket. Diversify your portfolio. So on that note, we'll just end this session. I hope it has been helpful in some or the other way. Kindly share your comments if something that you feel is very important for an investor or a trader. We'll be happy to hear from you. If this has helped you in one or the other way, please like, share, and subscribe. Hope to hear from you. Best wishes. Thanks a lot, and have a great day.